Nelson had those opportunities because he funneled money through his policy at the very worst time possible. He didn't do it when times were great, people. He started when times were bad, funneled the money through the policy, and got started. Hello, and welcome back to the podcast. Thank you very much for being here. Okay, you are graced again with Tarisa, and we are going to talk about today. Y'all met her. If you don't know who Trissa is, go back to the podcast where it says Meet Tarisa Shelton. So you know who she is, and then come back here. Today, we are going to talk about how Nelson Nash's real estate story is relevant today. And I think that this is so good. Trissa wanted to talk about this, and I think it's a great topic because so many people think, well, interest rates aren't 23%, so who cares? And there's such a huge sector of real estate investors that are doing infinite banking. And I personally watch from the outside because I don't obviously do a lot with real estate investing and I'm not in any of these groups, but I'm watching from the outside and they're going to get caught with their pants down just like Nelson did. And so let's talk about it. Trissa, what do you think?
Let's do it. I actually reread this chapter this morning just because I love going back to Nelson's book. And I'm just, every single time I read it, I'm like, oh, he was brilliant. He's so brilliant. But I think the central message and like what Nelson, the pickle that he got into was that he was over leveraged. He was over leveraged significantly in his real estate investing journey back then. And I think still today, the message is, go $1 million in debt and have someone pay $1 million, right? Have someone else pay for it. Go into debt and have someone else pay for it. Because that's ultimately real estate investing, right? Unless you're big balling out here and just purchasing your properties outright in cash. But because of that situation, it's one of those things that's everything works out perfectly until it doesn't. And Nelson got caught in the now it doesn't phase. And I think a lot of people have the potential to be doing that if they're not correctly playing offense and defense in their financial strategy. So basically, I think Nelson's question and experience was, well, what happens when the lever goes the wrong way? He had to renew his notes every 90 days and the interest rate kept increasing. And I think really what it points to me is that what happens when you don't have full control over your financial environment? And because we're not taught about thinking about our money in that way, it's just like, oh, we just use the banks. Like, yeah, of course, we just use the banks. We just use a hard money lender. We use all these other parties, but at the end of the day, they have keys to the cash that we need.
Yeah, and they have keys to the castle you bought. So
absolutely.
I think that we have to, and I'm going to break that apart a little bit because this is what I see as people leveraging in real estate. We're going to buy one property and then we're going to borrow the equity out of that property to buy another property. Is that anything different than what my farmers are doing? No, absolutely not. They're using paid ground to buy more ground. Okay. So now what happens, and I can't say that's what Nelson was doing because he's never actually disclosed if he was doing that or not. However, when you're leveraging, and now in what I'm seeing in the real estate world is not only are we leveraging and then we're going to the bank and then we're bringing IBC into that. And last I checked, it's called becoming your own banker. And it is based on an Austrian economic basis of saying, hey, let's get rid of the banks, not continue to create inflation. So we're borrowing equity to put it into another life insurance policy to buy more ground or to buy more property. But now we just went to the bank and we just helped the Federal Reserve inflate money. If we are using infinite banking in the real estate world, I feel like we forget this chapter, Trissa. We forget that Nelson got caught with his pants down. We forget that the bank has control. We forget that the title of the book is called Becoming Your Own Banker because we are chasing these rates of return and this massive cash flow, and we think it's never going to stop. It's crazy to me. Now, I'm extremely conservative. All of you listening to this podcast know I am ultimately far more conservative than most infinite banking practitioners out there. And there's a reason for that, because I have taken Nelson's lessons and learned from them. I didn't choose to go, Nelson didn't know what he was doing. I'm just going to repeat the same mistake, except it's going to be 2025 or 2028 or whenever, everything that goes up must come down.
Yeah, absolutely. It's so interesting to see how we all think that we're so smart and we repeat the same mistakes that someone tried to warn us about. So be like Mary Jo and and learn from Nelson's mistakes. Don't repeat it. Don't be over leveraged and don't be having your financial strategy exist on what the market may or may not do, because what if it doesn't pan out in the way that you want it to?
And here's the thing, though, that if Nelson were alive today, I often wonder if Nelson were alive today, seeing what's going on with infinite banking in the real estate world, because it's really just sort of exploded in the last couple of years. And so would he be screaming from the rooftops, listen to what I said, you're missing the point, right? Because he always used to do that anyway. Did you get to meet him?
I met him online when I had my Nelson Nash Institute practitioner interview, like before they let me in to be certified and stuff. And I was so glad that I had that opportunity because you could just tell he's sitting in his chair and he's got this like little twinkle in his eye, like he knows all of life secrets.
And then did he pass before you got to meet him in person?
Unfortunately,
Okay.
yeah.
Okay. So Nelson would be yelling at us for what we're doing. John and I just went over this chapter on the Farming Without the Bank podcast. And if you take his $500,000 at 23% with inflation, like I don't even remember what the number was, it's astronomical. That he had that paid off in 13 years to the bank, moved all of that debt over to his policies, and then obviously had to pay his policies off. But what we're seeing in the real estate world is rates of return. And we keep talking about a rate of return and we keep talking about a rate of return and IUL shit that will absolutely make my mind blow up. So we're going to use IUL for so-called infinite banking, which is nothing to do with infinite banking, or we're going to use a VUL or a UL or some sort of UL product because we're chasing a rate of return. We're leveraging. And again, we have completely forgot about the chapter. We completely forgot that Nelson inherited $500,000 of debt at 23%. And on top of that, his partner filed bankruptcy. So Nelson got another $300,000 to pay off. So he actually had $800,000 at 23%
Wow.
that he had to pay off because his partner didn't pay it. And so we have to look at this chapter, and I think it is so important, Nelson's story, because we're not following it at all. Instead, we're talking about leverage, not control.
I like that you said that. Those are two very different things.
Because you said it in the first podcast that we had with you, that you did not have control of your 529 plan. You were not able to buy the rental property you and your sister wanted to purchase. Well, you didn't have control. We don't have control in a 401k. We don't have control in an IRA. What makes us believe that we have control when we're borrowing money from a bank to leverage? Real estate investors are not any different than farmers in the aspect that a farmer will leverage himself for tractors and equipment and land, and a real estate investor is doing the same thing. They're both in bed with the bank, and the bank owns the house that the bed is in.
Right.
Who do you think is going to make those rules?
Yep. They have all of the control. And I love that you said it's very different than leverage, because I think we're so used to walking around every single day that we're not accustomed to looking up, and seeing who's really making the big bucks out there. And it is the bank. It's like they can impact so many things to make sure that they're meeting their bottom line and being profitable in the way that that any business is supposed to run, honestly. But yeah, they can change the name of the game. And that's what happened to Nelson. And that's why I love that origin story is he's like, hey, I did this in the way that the gurus told me to do it. And because of that, the environment changed, the financial environment changed, and the interest rates and the interest costs were so unsustainable for me. and my family. And because of that, I turned to my life insurance policies and revised my spending patterns so that I could take back control, so that I could have access to capital to pay off this debt that he owed. So I think it's really powerful to show what happens when things don't always go according to plan. How can you put yourself in the driver's seat of your own life? And in my personal opinion, a big part of that is making sure that you don't have to be reliant on banks. You can be the banker. That really is all of the keys, I think, to success. It's like one question that I encourage people to ask before they put their money anywhere is like, hey, who do I have to ask permission in order to get access to this money? Because you just said it, 401k, if you're employed, you have to quit, right? Or take a loan out against it, and you don't get to determine the repayment schedule. They do. And they can do all sorts of things if you don't pay that back. So it's like, okay, who do I have to ask for permission? And is it guaranteed? And is it liquid? It's like, those are really great questions to ask before you put your money anywhere, as just like an automatic filter.
No, it all comes down to liquidity, control, and guarantees. I mean, that's kind of where I go with it. I think even when we're talking about how is it relevant to today, I am assuming, and you tell me if I'm right or wrong, I am assuming that we have commercial loans and those might have a 5-year arm or something like that on those. Well, we are seeing it in the agriculture sector already, and mine is one of them. I have a land loan that has a 5-year arm on it, and next year that comes due again and I have to refinance. And so we might think, oh, interest rates were so low. If you have a locked in rate at 3 or 4%, that is low. That's a great rate. Why would you pay that off early? However, if your note is coming due in the next year, in this year, and I'm sure some people are already getting caught where they had a 4% loan rate and now we're at 7, or maybe we had to refinance. The first year interest rates came up and they were at 8. And now all of a sudden we can't make that payment. That's scary. And so what happened to Nelson can very easily happen to us. Because think about it. He was at an 8% rate and went to 23. We were at 3 or 4 and went to 8. It equally hurts on the payment amount, and it went to 8%. Or do we have renters in there? Because if we don't have renters in there because of the vid, and they said, oh, hey, you don't have to pay rent, and all of a sudden we don't have any rental income, but our payments went up. If we were too leveraged, that's a problem.
Yeah, it's a huge problem. I mean, if you think about it, the interest rate has doubled. So it's like, what happens if you can't make that payment? What happens if things don't go according to plan? And that's the unfortunate part about just like today's information financially, is that there's so many things that don't go according to plan just in regular life, which I like to call opportunities, right? Opportunities to learn. But it could be detrimental. It's like Nelson says this in his book. I'm going to read this quote. It's like, bankers don't lend you money because you have real estate. They lend you money because you can make payments. So what happens when you can't make the payments? Well, then you're forced to sell. And are people going to be buying up real estate really quickly with interest rates like this? Who knows? You might have to discount it. And that's another thing he talks about is like, what do you have to lose when things don't go your way? Well, you have to discount things to sell it off in order to get access to liquidity again, so that you don't have to continue to pay these payments that are astronomical. I mean, that's really common in commercial real estate is you have your 5-year balloon. Well, imagine refinancing when interest rates are double what they were when you first purchased it. That's going to hurt anybody.
Mm-hmm. And we're seeing it here. I have a rental property that I have for sale right now, and it's not going anywhere. I mean, it's been on the market a month. Yes, I had it listed a little bit high. We dropped the price, and people still are like, well, I can't. We've had a couple of people that are like, I can't qualify for financing, because they could have qualified no problem at 3-4%, but they're not qualifying right now at 6 or 7. And so, and it doesn't make sense for, I've had a couple people say, well, what would that rent for? Well, first of all, do your own dang due diligence, for God's sake. Why are you asking the seller what that would rent for?
Right. You're like $10,000 a month. I'm just kidding.
Yeah. Like, why would you believe anything I say? But they're trying to obviously buy it as a rental. but they can't pencil it out if they have to finance it. Because it does not, if you couldn't pay cash for this property, you could not get enough in rent to make any money on it because of the interest rates. And so when we bought it 4 years ago, obviously rates were in a very different spot. It was easy. And we paid cash for that. We borrowed money from the policy to buy that. So I don't owe money back to anybody. So we're not in a big, huge hurry to sell it. But it is funny. We had an offer on it last night and I dropped the price $15,000 because I was high. So I dropped the price $15,000. Somebody came in, tried to lowball me with cash, close in 3 days, no inspection. And he took another $8,000 off, plus wanted me to pay his realtor fees.
Oh, wow.
And guess what? I said, no, thank you. After a couple of times going back and forth. No, thank you. Because I don't need the money. I don't have a loan on it. All
Right, you're not
I have
making
to pay back
payments.
is my policy, right?
Mhm.
So I have the glory to do whatever I want. He was thinking, oh my gosh, they just dropped it $15,000, so they must really need to get rid of it. Honey, I'd like to get rid of it, but I don't need to get rid of it. And so thanks for playing, but you sort of met your match. I'm not in Nelson's position where I had to sell, because that's what Nelson said. All the geniuses are going to say, go sell it. And who's going to take advantage of it? The guy with cash that came in last night thinking, oh man, they want to get rid of it because they're making a payment on it. Sorry, buddy, not me. But that would have been a normal real estate situation. And he probably would have got exactly what he was asking for. So somebody could get out of it because they couldn't make a payment. It's empty. And, he's like, oh my gosh, it's empty. They're not making any rent. Like, I know what's going through his head. In fact, this is a funny story, because I called one of my friends who has land for sale. And she's like, hey, Mary Jo, this guy offered us $25,000 an acre and we want 40. And I said, what a snake. He's lowballing you. He's just trying to figure out if you need to sell it. And she's like, you think? I go, yeah, because that's what I'd do. I'm the lady sitting here with some cash trying to buy something. I'm gonna start low. I'm gonna throw out a lowball offer. So I called her and I was like, yeah, we got this offer and they lowballed us. And she was dying laughing. She's like, it happened to you. I go, it did, except I know how to play the game because I play the game. So
Right.
I get it. Like, I get what he's trying to do. It's just, I'm in a different spot financially that I don't owe the bank money. Nobody is coming after me for anything.
Well, and how great does it feel to be in that much control of
It was
even just that
fantastic.
one transaction?
Yeah, it was fantastic because he comes in, lowballs me 24 hours after we write it. So he already pissed me off from the get-go. Like, you just knocked another $8,000 off? Dude, there's 10 houses in our area in that price range for sale. 10 houses and mine is the nicest. This is where Mary Jo screwed up, is I didn't do my due diligence before I lowered the price, right? And so I should have looked. And now all the realtors are upset because I'm saying the buyer should pay their own realtor fees. That apparently is a new thing. I have negotiated that before. In the state of North Dakota, we've always done it that way. Like, the buyer pays, the seller pays. We've always negotiated who's paying that. But apparently all over the country, that has not been a thing. And so the buyer's realtor, I said, no, we're not paying their realtor fees because you already are trying to screw us on the price and you want me to lose another $8,000. And so the realtor said, well, I would sure like to get paid. Yeah. Have your buyer pay it. Like, I have paid my realtor on private transactions because I don't want to have to deal with the paperwork of buying something without representation and then doing all the work of it, And so anyway, it was nice that we were thinking about what we were going to do and they came back with their final offer. And my husband is like the quietest person on the planet. And he goes, no. Yes, he speaks when necessary.
He put his foot down on this
He
one,
was
Mary
like,
Jo.
no. But again, like you said, we had the control of what we needed. The money has been going back into a policy. The cash value is available from the rent. Like, do I want to continue to pay electricity and all that kind of stuff? No, not really. But it's not the end of the world either. Because I have control, I now have the ability to say, hey, you know what? If these guys don't want to pay me what I want for this house, then I'm just going to put some furniture in it and midterm rent it or short-term rent it. We'll see what happens.
Well, I think for everyone that's listening, what Mary Jo just basically went over is that she has unlimited options with this property because she is indebted to herself, essentially, to her policy. So it's like, okay, you could rent it, pay back the policy loan. You could sell it, refill the policy loan, or start another policy. Like, you're not in a desperate situation. Whereas a lot of people, when they have properties that they can't afford to make the payments, they have to fire sale it. And like you said, someone like you that has a lot of cash can take advantage of that situation. And take advantage is kind of sounds slimy, but you get what I'm saying is like not take advantage, but just use that, I guess, to your advantage because you can solve that person's problem because they're in need of cash.
Mm-hmm. Yep. And I'm doing, what am I doing? Anything different than what Nelson did? Absolutely not. My money is housed in the policy. I have the flexibility to pay that back whenever I want. And if I need to reborrow what I've already paid back so that I can furnish it, then I can go ahead and reborrow to furnish. Does not matter. But Nelson had those opportunities because he funneled money through his policy at the very worst time possible. He didn't do it when times were great, people. He started when times were bad, funneled the money through the policy, and got started. I have those same opportunities. It has nothing to do with the fact that I make more money. It has everything to do with the fact that I have control.
Well, and you've revised your spending pattern. I love that he says this in this chapter. He says, it was evident to me that I needed to increase my life insurance premiums dramatically to create a pool of cash from which to borrow to pay off the bankers that I owed. How could I do both? I could revise my spending pattern. Like I always say this to my clients, it's like, hey, pay your premiums first. That is a place where you can have access to your money and have it grow for you as long as you live, and then do the things that you're going to do with it. That should be the home base for your funds versus thinking like, the rest of everyone else out there, which is like, okay, I'm going to pay all of my expenses, pay for marketing, pay for down payments, and then whatever's left over, I'll put in savings. It's like, no, we have to retrain our thinking to make sure that we're prioritizing our own essentially war chest of opportunity in the event that things go perfectly and in the event that things don't go perfectly. It's like either way, you can be like Mary Jo and be in a position where you have all of the control and you can afford to have the patience. You could choose not to sell and it would not be a big deal. A lot of people are not in that situation right now.
Yeah. And did this take me a year to get there? No. Let's remember Mary Jo's been at this 15 years. So it did not take me a year to get into that position. It's not going to take, it didn't take Nelson a year. It took him 13 years to move all of that over to his own policies so that he had control of that.
It's exciting to be in that spot.
Mm-hmm. Do you have anything else? I know you have a bunch of notes because Triss is a planner. Do you have anything else in this chapter that you wanted to touch on before we wrap her up?
I would just say for anyone listening, I would encourage you to know that position is possible and it does take time and discipline and understanding, like Nelson says. So, just keep on the good path.
Mm-hmm. Okay, awesome. If you guys have read the book, Trissa loves real estate and business. And so if you need to schedule an appointment with Trissa, we are going to have a calendar link for her so that you can get on her calendar and you can meet with her if you want. If you don't want to wait for me, if you are a farmer listening to this, do not schedule with Tarisa.
Yeah, please don't. You'll be highly disappointed. And that's not what we're in the business of doing for people, is disappointing them. So yeah, farming is just not my thing. I don't understand. I had to ask Mary Jo what a gravel pit was the other day. I was so intrigued.
Yeah, we were in our agent training meeting and she's like, gravel? What? We're going to get her to a farm, but she doesn't know a lot about them. And so if you are a business owner, if you do real estate and you are listening to this, we will be adding a link. If you need a link to her calendar in the meantime, just email Mary Jo at Without the Bank and we can get that to you if you don't want to wait for me. Either way, let us know if you are ready to get started, get the books, do all the things. If you have comments, questions, concerns, email me, maryjo at withoutthebank.com. And you have a fantastic rest of your day.